Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over the market. Let's talk about what happened today, this week overall. And yeah, I'll give you my thoughts moving forward, moving into next week. Next week, I think could be a little bit potentially, small shakiness to start the week off. But I think next week should be a good week to get the market really, finally rolling in the right direction. Let's just say that. But all in all, if you enjoy, please don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, if you enjoy my technical analysis, thoughts on the charts, updates, etc., well, I do share my thoughts with my members every single day the market is open, while it's open throughout the day. So definitely check that out if you're interested. Just $3 a month, you get access to all my thoughts, post updates, mainly on Tesla stocks, sometimes other stocks. Lately, I've been sharing other stocks as well. Or for $5 a month, you get access to everything in the first tier, plus NVIDIA daily updates as well. But jumping into it, Tesla. Closing the day with almost a 4% rally, closing pretty much at $250 per share, which obviously compared to the market, you can argue is maybe a slight underperformance, but kind of in line, arguably a slight underperformance with QQQ up 2.5%, right? Tesla should be up closer to 5% with this kind of day, but sometimes, it is what it is. The reason it closed at 250, I'll be honest, is Tesla's max pain was 250, right? Sometimes that's just kind of how she rolls, right? You can see if I go here, Tesla max pain, if this decides to load, is 250. I don't know why it's not loading. Whatever. I'm sure you trust me. It's 250. I don't know why it's not loading. Surely one of these loads. Here we go. Where does it say 250? I don't know. It says somewhere 250. Whatever, man. Just trust me on it. The max pain was 250, and that's what we closed pretty much at 250. So what does this actually mean moving forward into next week? Well, let's start off with the 1 hour chart, right? 1 hour chart is, one of my favorite time frames, especially lately. I've been very much enjoying the 1 hour time frame lately. Very, very nice. 15 minutes pretty good too, but I like the 1 hour personally. Anyways, so what can we expect moving forward? Well, today, we had that little bit of a sell-off, right? We had a nice open at that, classic 250 level that, we're still finding some resistance at, and we still couldn't close above. So that is, I wouldn't say it's necessarily a concern, but it definitely would have been better, right? It definitely would have been better to close above 250. We couldn't do that just yet. So regardless, we got rejected at it arguably twice today, right? Once at open over here, and pretty much right at close or towards the close. You can see here, right? 2 rejections at 250. As we got rejected, we came right back into the cloud, pretty much near the bottom end of the channel over here, you can see roughly. And then we, of course, found a bounce back higher, and now we're back there. Now, Tesla is arguably printing what looks to be a nice looking rising triangle pattern where, we've fallen. I mean, usually rising triangles are bullish continuation patterns, but even this one could potentially be, a reversal situation where, we're constantly getting rejected at the exact same level, but we're making higher highs and higher lows. So, ultimately it really just comes down to we had a 15-minute closure above it. You can see here on this candle right here, but we couldn't really get nice follow through. So 1 hour would probably just be better confidence inspiring, right? But ultimately we would just, we need to close a 1 hour candle above 250, 251, 252, something like that, that $2-ish range. And that should be pretty good news for Tesla moving forward. But regardless of, whether or not that's the way you want to look at it. Another way to look at it on the 1 hour in this case is the fact that, well, two ways, is the fact that, we're still in this rising channel, right? I mentioned this rising channel, theoretically should continue rising, right? And this is a pretty steep rising channel, right? But, we were also in a pretty steep descending channel for a long time, actually, like weeks even, right? That looks something like this, right? We're in this very steep descending channel all the way from February 21st is when it technically started, which is pretty ridiculous, right? And we were in this rising channel all the way until March 11th. That's a pretty long time, man. That's over 2 weeks of trading days that we were inside this very steep, also descending channel. Right now, it's not impossible to have something similar back to the upside, right? So just keep that in mind. But regardless, we're in this rising channel. So as long as we're within this channel, I assume we will overall make our way higher. And that I'd be pretty surprised if we don't. Another sign that I'm starting to like to see on Tesla stock is the fact that on the 1 hour chart, you can see this white line over here. This one kind of been moving with us, the 50 EMA. This is the first time today that we have officially been testing it, that we've had enough bullish pressure, or at the very least, the bearish pressure has eased off enough to bring us up to this 50 EMA. Again, you can look all the way back from here, when we pretty much started this breakdown right here. This whole time, you can see, keeping our eyes on this white line, not one single time. We got kind of close over here, but we didn't actually really get to it. We haven't actually pretty much quite literally tested this line, right? Not a single time. And this was the first day in literally weeks that we have officially finally got to the 50 EMA without just, the bearish pressure pushing us down lower and steeper and faster, right? which is, showing that that bearish pressure is starting to ease off, which is a good sign. The next step I want to see is, well, while we're within this rising channel, to continue rising within it, which honestly, assuming things go well, even by Tuesday, we can potentially even see Tesla, closer to the 270s potentially. That'd be pretty impressive. But, we also want to get back above this 50 EMA, right? Once we cross back above the 50 EMA, get these two moving averages down here, the 8 and the 21, to cross back over as well, which is essentially what NVIDIA did over here. You can see a nice little gap up. We can also gap up on Monday morning. That'll be ideal, right? We could do what NVIDIA did. It gapped up above the 50 EMA, and then it started turning it, you can see, into support. The EMA's also crossed over, and NVIDIA has been having a pretty nice, follow-up since then, and holding pretty strong as well, right? So that's just something that, we're looking for Tesla to do now, right? Essentially is what I'm trying to say. So let's see how that actually plays out moving into Monday. Now, Monday has been for the past, pretty much since this correction began, ultimately, has been a pretty bearish day. It has been pretty much the most bearish day of the week for a few weeks now in a row. So if we can get a change of character essentially in Monday, coming up this coming Monday, essentially in a couple of days, that will be a good sign. That'll be a good sign for the market that, there is a change of character, if you will, in the market's overall sentiment, I guess, which will be a very nice sign to see. Obviously, next week we have FOMC on Wednesday. Keep that in mind. So, take that for what it's worth. But nonetheless, I do think, maybe we get a little bit more shakiness to start the day off, or the week off, maybe even on Monday. Maybe Monday just happens to be another, unfortunate day, and Tesla sells off back down to about 244, 245. But I would expect that to hold and us to push up higher off that, or even better, a gap up, and then we continue higher, kind of like what I just showed how NVIDIA did. That's pretty much the 1 hour analysis, right? Let's go over to the weekly. I want to do the weekly here because the weekly has officially, or the week rather, has closed. So the weekly is interesting. This is this is quite a hammer candle. I'm not gonna lie. You can even argue that this one is pretty much a doji candle ultimately. Whether it's a doji candle or a hammer candle. Let's take a quick look. Actually, it's hard to say if that's a doji or a hammer, right? You can kind of argue it's either or, right? You can argue it's a dragonfly doji, or you can argue that it's just a hammer candle, right? Whichever one you want to make an argument for. I think they're both pretty similar in structure. But the point is, I'm gonna stick with the hammer because the hammer is, in my opinion, more bullish, and this is quite a hammer candle, I will admit. Now, the one thing I would have definitely liked to see is, again, a close pretty much, around the mid 250s. That would have made this hammer candle green, or in my case white, which would have been even better, right? A green or white hammer candle is more impactful than a red one, which is the one that we unfortunately got. However, it's a hammer candle nonetheless. And what does it show? Well, I think it kind of speaks for itself, right? It shows some pretty intense buying pressure, and we pretty much closed. The idea is the fact that it shows that we opened up towards the higher end of, in this case, the week, pushed down significantly, and then within that week, we had enough bullish pressure come in to buy it all back up and pretty much close at pretty much the same spot or close to it that we opened up the week on. In this case, it's a weekly candle, of course, right? Same thing on the daily, whatever. But the point is the fact that it just shows that, the bearish pressure is easing off and the bullish pressure is actually kicking in, right? Very, very, it's one of my favorite candlestick patterns. Again, would have preferred it to be red, white or green, but nonetheless, still pretty good. And this is quite a hefty one, right? The longer the wick and the smaller the body, the better it is. And in this case, we have an extremely long wick and an extremely small body. So this is with a very small wick at the top. This is also pretty important. The wick at the top is also very, very small, which is also good news. So yeah, it's a beautiful looking hammer candle. It's like, I'll give it like an 8 out of 10 on this, on a scale of how good it is. 10 out of 10 would have been if it was green or white in this case. That would have been even better. That would have been 10 out of 10. But nonetheless, pretty good. So I do expect to follow through on this, right? This combined with the fact that we're in this 1 hour rising channel, I think both are pretty good news. But again, the only concern, I would say, quote unquote concern, is that fact that, we did technically officially break down below this channel, you can argue, right? This massive rising channel that we were in. We did technically close below, but the thing is we're so damn close to the line that I think that, on such a large scale and after such a very aggressive and vicious selling pressure, you can easily make the argument, the fact that, it deserves some extra wiggle room, right? The fact that we're this close to it implies the fact that, it's not that bad. Like if we close well below it, then it's like, okay, then, maybe we're not out of the woods just yet. Maybe we won't get that relief rally, etc. But because we're just so darn close to it, right? And, because my trend line obviously isn't drawn to absolute perfection, it's just a guideline. You can give it the benefit of the doubt, is what I'm saying, right? On top of this, the weekly, we're very far away from the 50 EMA, but that's not the main thing. The main thing is the fact that the weekly is extremely far from the up to down. We're 22% downwards from the 8 and the 21 rough area, and a rally of about 28% higher. Like, we're so far away from the 8 and the 21 EMA on the weekly. Like, it doesn't, you have to understand, guys, like, if you look back in the history of the stock, right, like it doesn't get this far away from these EMAs. Like even look at this one. Even here when we were selling off this aggressively, we never were that far away like we are right now from those EMAs. Like especially the 8, right? That's a pretty fast. I mean, yeah, it's a weekly chart, but it's still a pretty fast moving exponential moving average, right? Even here to the lowest point, we were only down. Actually, no, this was pretty far away too. No man, I lied. But okay, fine. We were, but regardless, the point stands. Look what happened just a couple of weeks after we slingshotted back up very aggressively right back into them and even above them. I'm not saying we'll go above them this time necessarily, but the point is that we did slingshot back into them pretty quickly, right? So this would be something similar of that sort. So let's see how this plays out, right? Let's see how this plays out. But again, usually when you're this far away from the exponential moving averages like this, especially the quick ones, again, you don't usually stay that far away from them for very, very long, right? You're usually at the very least, you meet somewhere in the middle like this, which would bring Tesla somewhere to the 280s, let's say 290s, or we can move up back to it, right? Whichever one really comes first. But again, the point is the fact that you don't stay away from them this far, this long, usually at least. Yeah, so the daily, you can see how important this kind of very low 250s level is. We need to get back above it ideally as soon as possible. We did come back to the 8 EMA on the daily chart, so we're back to it. That's a good sign. But we need to start closing daily candles above it, kind of like what NVIDIA did back here. You can see it closes a daily candle above the 8 EMA, and that was a nice sign that that was another sign that the bullish pressure is coming in and the bearish pressure is easing even further. So in other words, Tesla wants to start getting a daily closure, let's say maybe Monday or Tuesday or something like that. Again, that mid 250s is just that level, right? We need to start getting those closures in the mid 250s. That still is a crucial level. That would be a good sign. The RSI, I did switch it back to 14 here. On the RSI, got very oversold, but we did exit oversold territories. A lot of people, what they use RSIs for is instead of entering, the stock when it's down here, they actually wait for it to get back above. And then we did get back above. And now we're showing a little bit of a bullish divergence, if you will, slight bullish divergence on the RSI as well, which is also a good sign. And some people wait for it to kind of retreat back upwards like this from oversold territories before stepping in. That's exactly what we did the past 2 days and including today. Also a potential positive sign for those kind of traders. So there's a lot of good signs setting up for Tesla stock, right? There's a lot of bullish momentum setting up. Now, obviously the biggest thing that would tell me that the bullish momentum is no longer the case here, if you will, is losing this rising channel. That'll be the main thing I'll be looking at. Essentially really dropping below 245, 244, something like that, and really starting to close 1 hour candles below those levels roughly would be a bad sign. So that's the thing to watch out for. Let me see. Am I missing anything? I think that's majority of what I want to mention. I don't think there's too much more to talk about. Monthly, we still have a lot of work to do. Monthly is nice, 50 EMA. It's holding pretty nicely there. I'm pretty sure if I bring out the 200-day moving average, I'm pretty sure we close back above the 200-day moving average. I know a lot of people really like the 200-day moving average. Let's take a look at and see where that is exactly. But I'm pretty sure we closed back above it as well. Just barely. Yeah, you can see we actually just barely held the 200-day moving average. I know a lot of people rely on this one quite a bit. So the fact that we held that is also a pretty good sign. So again, there's a lot of good signs setting up. Now, can it all fall apart? Absolutely. But, as of right now, I don't expect it to. Pretty much 1 hour, it will tell me that it's falling apart pretty quickly. So let's see how that plays out moving into next week with FOMC. But I do expect the market, especially the market, looking pretty decent, right? Also, the market setting up some nice looking hammer candles. SPY at the 50 EMA, right? QQQ right around the 50 EMA. There's a lot of signs pointing that the market maybe a little more pain early in the week. Maybe, definitely a possibility. But overall, it's feeling like it's ready to get, at the very least, a dead cat bounce and relief rally moving into the next couple weeks or so. But yeah, I don't know. That's all I got. So let me know what you think down below, ladies and gentlemen. A very quick look at options flow. Let's take a little peek over here at Tesla stock. Let's see what it's telling us as I go back to it over here. That stock, yeah, pretty mixed flow. Honestly, pretty mixed flow throughout the day. Nothing really crazy. Yeah, nothing really standing out, to be completely honest with you. Yeah, nothing crazy. Pretty muted, honestly. Surprisingly, pretty muted. So let's see how we open up on Monday and start off next week with FOMC. Thanks for watching. See you on next week. Peace.